Step 1. How to polish your Elliott Wave principal trading like a pro. Step 1. How to polish your Elliott Wave principal trading like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. For Elliott Wave trading, our website is www.24elliottwaves.com. Today, I want to share with you, few tips and tricks that you can use to polish, your Elliott Wave principal trading like a professional trader, all right? Now, before we continue, I want to clarify something very important. Our goal is to simplify the wave principle without diluting it, okay? All right, so here we are. I'm on a monthly chart for NVIDIA Corporation. So if you are using a computer, you may heard about NVIDIA, a bit difficult name to pronounce. The epic is November Victor Delta Alpha, NVDA, American stock, listed on the Nasdaq 100, okay? So, how can we polish our Elliott Wave principle trading, all right? Because the Elliott Wave principle is based on market principle that if a financial instrument is trending, it's likely to trend with 5 waves. After the trending phase, very often there will be a profit taking or a correction. Very simple principle, all right? But when we are applying the wave principle trading, there are other market principles that we must not ignore. All right, this will help us polish our Elliott Wave principle trading because we are not the only market participant in the market. Because very often, what I have noticed, I may be wrong. All right, you can disagree with me here. Sometimes Elliott Wave traders are doing their own thing, and sometimes we can show total disrespect to other traders because we have a bit of edge in the market, but we are not alone in the market. And there are other market principles that can help us improve, or polish our wave principle trading, all right? So what are we trading, all right? Okay, so you may say we are trading forex, we are trading stocks, we are trading commodity. No, the correct answer, we are trading the price. And the Elliott Wave principle allows us to concentrate on the price itself and nothing else, all right? So we are looking for wave pattern, the flat correction pattern, the zigzag pattern, the multi-wave, the Elliott Wave cycle, and so on and so on. But there are other market principles that can also be useful for us and help us improve our wave principle trading, all right? So I want you to pay attention to the 2 vertical lines on my chart. Okay, we start the demonstration here. I'm going to color the 2 vertical lines into green. Okay, so green, you see the vertical line, green. Follow my cursor on the screen, all right? By the way, this video is for educational purposes only. It's neither solicitation or an offer to buy or sell any financial instrument, okay? So here we are, NVIDIA stock. We can see that from the year 1999 up to the year 2003, okay? The price went up. You can see it went up like this and then came back down, all right? So let's say from 2000 to 2003, the price was confined in this 2 vertical line, yes or no? So it went up like this, okay? And then it came down, okay? All right? Now, pay attention again to what the price has done here. I want you to concentrate because it's a bit, advanced, Elliott Wave, because you want to upgrade your Elliott Wave principle trading. So pay attention again. I want to call out the 2nd vertical line here, okay? Pay attention carefully, okay? The 2nd vertical line, I'm going to call out it now. Let's please the ladies, all right? No sexism here, okay? The pink line, so between the green line and the pink line, what the price has done, the price went up again, and then came down, okay? All right? So what is happening now, my friend? So let's pay attention to this session here. So this is from 2003 to 2009, okay? Now we are here again, all right? And I'm going to put a line where we are now. Okay, so we are here now. So from 2009 up to 2003, you can see that the price, you see, try to repeat the same pattern almost here. 1, 2, 3, blah, blah, blah. But here it was a bit stuck. You see, 1, 2, 3, and it come down. Now we are here. So the price trying to do similar thing that it has done in this session here. And we are now approaching the top somewhere here. Okay, so so we can say that this move up will be followed by what? A move down. So there was a move up here, a choppy move, a bit funny move, blah, blah, blah. This is a bit messy here, you can see. Okay, price went up like this and then came back down. Okay, again here you can see a bit messy, and then again it came back down. Now this is more messier than the last two, and then again it's going up now, and there's what is likely to take place, my friend, is likely again to come down. Okay, are you getting the message now? Okay, there is something that the professionals are paying attention to, so they will know exactly the range. So you see here from 2000, say 2000 to 2003, the price went down from the green line to this one here. So I'm going to get your attention by using some blue lines, blue horizontal line. Okay, stay focused, please. All right, if somebody is disturbing you, go away from that person for a minute. Okay, all right. So here we are. So I want you to concentrate, okay, on the price action between the two green lines. So the price went down from here all the way up here. So that's the range of a cycle. We can say cycle because a cycle is when the price go out from A and return back to the point A. So very often that's a definition of a cycle. So we go round, okay, from the winter to the winter, from the summer to the summer, okay, from the beginning to the beginning again. So it's a one cycle, okay. So here we are. We price went out and then come back to here, okay. So we want to know the range of the price action. So you may say, Joe, what that got to do with Elliott Wave and polishing the Elliott Wave principle? Follow me, stay tuned, okay? So we have this range here, okay? All right. You will notice that anytime I have a channel, anytime horizontal channel, rising channel, declining channel, I always pay attention to the median line. And the median line is this one here, okay? So I divide that range, okay, into two, okay, here. So price went up. So as the price goes above this range of a cycle, professional will project that the range of the cycle in the direction of the price. So you may say, George, why? It's very important because this is what is acceptable for the market in the past from 2003 to 2003. It was acceptable for the market that this stock can go out from this point all the way up here. There is a reason, fundamental reason, technical reason why the stock stopped here. And then there was a correction. So if one day the price goes above that range, they will project that range on the top of it. So it's somewhere up here. You can't see it on my chart. But just remember that we are just projecting the width of this price, okay, action from the low to the highest point of a cycle, all right? Not a candlestick bar, but from a cycle. We are measuring a range of a cycle, okay? Now it goes above it, we project it like this, okay? So we will say that, okay, probably we're going to do a double, okay, the previous, okay, range. But look, remember, we don't want to forget the midpoints. Look, so when can we do that? Okay, so now that this cycle is completed, now we see here the price now doing other things here, we will quickly project that range on top of it. All right, so then we will also pay attention to the median point, the midpoint. Look, from 2003, professional projects the range of the previous cycle up here. They are paying also attention to the midpoint. All right, so price start going up. Okay, I don't want to talk about it. Okay, anything else? Price going up, going up, going up, going up. Look where the price did stop. So from 2003, the price start going up again, going up again, going up again. The price stop where? At the midpoint, okay, of the projection. So our projection is all the way up here. The midpoint is the line that I've drawn on the chart here. So how this can help our Elliott Wave? So suppose from 2003 to up to this point, we were counting Elliott Wave. So it will be, okay, very important for us to know where the price is likely to go. This will allow us to navigate through the financial market. So we will know that this is a critical point that the market is watching. So when can we know that? We already know from 2003 as this move started here, 2005 price. This cycle is now completed. We know about this cycle, the anatomy of this cycle, all right? We know everything about this cycle. It's completed, it's done and dusted. We know it, okay? Now we use the range of that previous cycle in order to forecast what is likely to take place in the future. And we'll also pay attention to the median line. So we know now that this point, since 2003, 2005, we know that this point is a very important point that we must watch. Remember that end of 2003 up to 2006, we already know that this point here is a critical point for this stock, NVIDIA. This is exactly where the price did change direction. So when I'm counting my wave in this session here, I will be paying attention to what? This point. That's exactly where, okay, this trending phase has ended. And look again, it crashed down. Now this is, by the way, what we call a fractal pattern. See, price went up, a total retracement. Look here again, it went up, total retracement. So here it is. You see the feature now? So this is a step one, how to polish your Elliott Wave principle trading like a pro, using the range of the previous cycle, projecting it on top or below. So if the price was going down, we will project it below. Here it's going up, we project it up. Or we can do both to set our target, midpoint, and the ultimate target somewhere up here. Now, for new traders, if you have any question, put in the comment section, and in due course, all right, I'll record another video to answer your specific question, all right? Because some traders, all they need, they can trade, all right? But they just need us to show them the direction, and they can do everything by themselves. And that's what we are doing here, all right? For our competitors, I want to reassure them that we are not here to destroy, okay, our competitors. We are not here, okay, to mess up businesses, all right? We are here to teach traders, somebody who wants to learn to use the Elliott Wave principle, all right? We will not, okay, give the whole Dow Jones 30, okay, market forecast for free. That will be not good for other businesses that are doing the market forecast. I need to mention that, okay? So don't worry. So here it is, so we know now, okay? You see here? So we need to understand what we are doing here. We have a fractal pattern, price went up, blah, 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 choppy, blah, 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 up, and then crash down. Here again, choppy, blah, 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 up, and then again, same pattern. Here we have again the same pattern being formed here. You see, here it went up like this, choppy. 1, 2, 3, 4, 5. Choppy, really choppy, violating all the Elliott Wave principle, but it managed to go up. Here again. Here we are again. 1, 2, 3, blah, 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 choppy. And now we are again. Where are we heading? We are heading towards, okay, which level? This level. Because we know that this is a very important point for this financial instrument. We can call this as the gene, okay, the Elliott Wave gene of NVIDIA Corporation. The level of 3500, that zone is a critical point for this stock at this point in time. If one day it goes above it, we know the ultimate target, which is somewhere up here, the projection of the original range of this cycle. It makes sense? Are you with me? So you may be even on the hourly chart. So you say to me, George, this is on a monthly chart. How about a 2-hour chart? I never look on a monthly chart, George. I'm a new trader. I want to be on a 5-minute time frame. All right. Use the top-down trading method. All right. So the same thing is happening, but I'll come back. I'm going to go to the lower time frame and I will show you also, okay? So here we have again the same pattern being formed, which is a fractal pattern, in fact, all right? And what I like to call predictive Elliott Wave, okay? Predictive fractal pattern. I need to mention that, otherwise, okay, I can be in trouble because there is another type of fractal in the market, but I always talk about predictive fractal pattern, okay? So there is a key level. Doesn't mean that definitely guarantee now this stock is definitely to crash down here, all right? Use a top-down trading method, all right? Okay? All right? Don't assume that this time definitely you're going to crash down again from here, all right? It may push it all the way to the ultimate target. That's why we recommend to traders to use a top-down trading method. So there is one other market principle, okay, a market principle that is helping us now. So we are Elliott Wave traders. We know that the market will trend and the market will correct itself. All right. So if it's trending, it will be in a rising channel forming 5 waves. All right. If it's correcting, it will be okay in a declining channel if we had an uptrend before. All right. And we understand the structure of okay, the price action. But now there is something else that the market, another principle, which is the range of a cycle. So here it is. We have a range of a cycle here. Okay, there was a cycle here from 2000, let's say 1999 to 2003. We know the anatomy of this cycle. Now, if a new cycle has begun, we can use the previous or the range of the previous cycle to determine, okay, the key support and resistance level of the new cycle that is in place. In fact, there is another thing that I can mention to you now. You see the width of the cycle. So the cycle, you can see the time it took for the cycle to be completed. Professional also use, okay, that to project in this, okay, the turning point. This is about Fibonacci time zones. See here? So it started here and ended here. This is the time, okay, period, okay, the period it takes for this cycle to be completed. So we know the period, okay, 2000, let's say 2000, 2003, all right? The cycle is completed, okay. Now, if a new cycle began, we will also project that the length there. And we will put a vertical line there. Okay, so I'm going to put another vertical line there. So you see, this will help you. So you see where this vertical line is not by mistake. Professional knew that this cycle that was in place here, all right, this is, okay, the time it took. As the price reached that level, they sold it. Can you believe it? Are you getting the message now? Are you getting the message? Are you polishing your wave principle? So don't be arrogant to other market participants, the market geometry traders, or the predictive fractal trader, Mr. Benoit Mandelbrot, okay, the leader of, okay, fractal pattern. All right, here it is. The market knew. Okay, let's project that. Now we are projecting the time it took for the cycle. Okay, let's project it again here. Okay, I'm going to place again a vertical line there. Okay, here it is. And it took a bit of profit again. Yeah, it came down a bit. Let's keep doing it. Okay, let's project it again. So we can project, okay, the height of the cycle, which in the direction of the price, up and down. We can project also, okay, the time, okay, the length of the cycle in the direction of the price. This is the height of the cycle. And here we have the projection of the time or the length of the cycle. Okay, now again I can draw, okay, that vertical line here. And look what's happening here. A new cycle, okay, within 2013, the market, you can time the market and forecast the market using this principle, combining with the wave principle to determine where is the, okay, turning point. So now we are here. So what have I done so far? Are you with me? So we have a cycle here. We measure the time it took for the cycle. A new cycle has begun. Okay, my friend. Yeah. So there are many definitions for a cycle, but the common definition for a cycle from the starting point to the starting point. From the starting point to the starting point, okay? But the cycle doesn't go all the time to the starting point, all right? Okay, so now we are projecting it to determine, okay, the possible reversal point. Look at this one here. Can you believe that? Are you getting a message now? Clearly cut. Be ready for it. And so at this point in time, you don't just go and buy and cross your leg, your arm, your fingers, hoping that everything will work well and I will retire earlier. Okay? So we will use a top-down trading method. We will go to Google Finance. We will perform what we call Google Finance Assist test. Okay? We will check the fundamental. We check the market environment. What is the market doing? The global economy, the S&P 500, the market leaders, we check everything. Okay, it's good market environment. If the market environment is not suitable, we will wait, all right? market environment is suitable for us, a new cycle is likely to begin. We join the cycle and we just ride it all along. And here it is, boom, 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 it's going up. So now let's project it for the last time. Here again, we project it. Okay, no cheating, please. All right, no cheating, my friend. All right, let's put it clearly. I put my vertical line before. I'm going to move it to where we will expect it this time. So the time projection for this previous cycle is somewhere here in the future. We are not there yet. Probably this year in July, we may see, okay, that the price is now again at the terminal station, so to speak, at the station, all right? And we will monitor, okay, Google Finance, Yahoo Finance, and then we'll keep our eyes on it and monitor it. And if there is a bearish celebration, we will join them. By the way, okay, if you are a director for NVIDIA, it's excellent company. So we are not saying to people to sell NVIDIA and forget. All right, what we are saying is that every stock will go up and then will pull back and then it's become cheaper and people will buy again and then we ride it again. That's what's going on here. It goes up, it becomes cheaper. Smart investor bought it again, it goes up. But excellent company, all right? So don't worry, okay? It's not to promote a bearish party, all right? Okay, so here it is. So we can project, okay, the height of a cycle. We can project the length of the cycle to determine the possible reversal point. As we are counting Elliott Wave, this will help us. So you see here, you start counting Elliott Wave. You see, this is a critical turning point. If it end up to be, okay, your forecast, okay, for the end of the third wave or the end of the fifth wave, you will pay attention, yes or no, okay? So this is just a first step, okay, how to polish your Elliott Wave principle like a pro. Generally, when we record a series of videos, trader will watch first one, second one, and then sometimes they ignore the third one. But I recommend to traders for this series of video about step one, how to polish your Elliott Wave principle trading, that you may find some time and watch all the video that we will post forward because each video is unique and I will not repeat myself, okay, in any of them, okay? Thank you for watching and then we will speak to you very soon. We are the TSTW24 traders talking about step one, how to polish your Elliott Wave principle trading like a pro. See you in step two, when I will be discussing another tips and tricks that you can use, okay, to repolish, okay, your wave principle. Happy trading to you all, and until the next time, enjoy yourself and be very happy. Speak to you soon.